Yo, welcome back to Infinite Investors. How are you feeling? Forget me, forget my portfolio. How are you feeling? How are you doing? Because I know how I'm doing, and you guys are about to know how I'm doing. But get in the comments even before you even hear the rest of this video. I want to know how you're doing. I can assume that a lot of you, like me, are doing pretty good, and this is the type of week where we actually love the market, and this is the reason why we invest. It's been a good week. It's been a very good end to the week. Specifically, I'm on the 7-day tab here, but I'm going to be going into all of it. So, you know, grab a seat, grab a chamomile tea, and listen, we're going to get cracking. I'm going to talk about one dividend payment that I've received this week. I'm going to be talking about why stocks have soared. I'm going to be talking about top movers and fallers and what to expect with specific stocks. I'm going to be talking about my next week predictions and the trade war. And I'm also going to be talking about stocks that I am selling. Get out of here. I'm getting rid of some stocks. I haven't sold them yet, but I'm going to be telling you which ones I am thinking about selling. So if you want to know more, please like, please comment, please subscribe. I'm on a mission to get to 2,000 subscribers and get the world of investing out to more people in a clear, simple and transparent manner. These are the types of videos to be sharing because, you know, I'm up £800 week on week without lifting a finger. And obviously, you know, that is the reason why we invest in the stock market, so that money is made while we sleep. Money for Mek while we sleep. But listen, first of all, Landsec has given me a dividend of £2.32, which means my overall dividends for the month of November is sitting at about, the month of October is sitting at about £1. Sorry, what am I talking about? I'm so gassed right now. I'm so gassed. It's sitting at about £160 overall. But for the period of October, which was the interim dividends, I'm pretty much done now. There's not going to be any more. You might see some quarterly dividends that are coming through with certain stocks. I might see some. I've also got a monthly dividend payer being SEMB, so I'm going to still be getting that every single month. But pretty much the next period of dividends to expect now, I think, is November, where there's quite a few dividends I'll be expecting. So I'll report on that closer to the time. But yeah, £160 this round in terms of dividends, and Landsec was the one that just paid me most recently. I'm going to flip over from the basic side and go to the investment ISA, because we're going to be talking about what you all want to talk about, why stocks have soared this month. If you look at this graph right now on your screen, you're looking at the past 7 days. This is the Craig David view, and you can see towards the end of the 7th day, which is October the 10th, it all started to go up and curve round. And you know, as a man, we like curves, and you know, it doesn't just have to be on women, it can also be in the market, and that is what's happened this week. I told you in the very last video, the very last portfolio update, to look out for 2 dates, the 10th of October and the 30th of October. Now, the 10th of October has passed, and this is the reason why we're seeing a rise. We could have seen a fall, but we're seeing a rise because the Office of National Statistics, and I will be reading this from the Beeb, basically said the UK economy is expected to avoid a recession after showing better than expected growth in the 3 months to the end of August. The Office for National Statistics said the economy would now have to shrink sharply in September for the third quarter to show an overall contraction. In 3 months, the economy grew by 0.3% as weak manufacturing was offset by buoyant TV and film production. That's a very niche industry. It's probably Love Island. We can thank, you know, Michael and Ovi and all of them people on Love Island. That's probably the reason why we're going to avoid a recession. That's childish. Even so, the economy unexpectedly shrank in the month of August by 0.1%. So what we're seeing here is that there has been an unexpected shrink slightly, but overall the economy grew by 0.3%. And basically whatever happens this month, it has to be a very sharp decline. But if it is a sharp decline, we go into a technical recession. If we don't go into a sharp decline, then we avoid a recession, which is going to see a lot of your stocks continue to rise, which is, you know, really important and really powerful and really what we want to see. And I'm going to go more into that into the top mover section. But also why stocks have soared. I know some of you guys are thinking, well, the pound has slightly risen due to Brexit talks, so that might also be a reason. No, it's not the reason. The reason why it's not the reason is because usually when the pound rises, it actually has an inverse impact on the markets. You start to see that stocks fall when the pound rises. So if you haven't checked out my video, I will put the link in the description on terms of the correlation between currency and the stock market. It's only 10 minutes. You know, I like to ramble, but it's only 10 minutes, and hopefully it should give you a clear indication of what happens when the pound rises or the pound falls, and what to expect with specific stocks and sectors within your portfolio. So check that video out, but I don't believe that that is the reason why the stocks have started to rise. In terms of top movers, I'm merging movers and fallers. In terms of top movers, the first one I'm going to get into is CYBG. Now, the percentage I'm going to give to you is not the one on the screen. It's the percentage since the last time I invested. I check mine on a rolling month-for-month basis because I've been dollar cost averaging. So, CYBG has gone up by 9.57%. For me, you can obviously see in the 7-day chart it's gone up by 18.41%, and obviously 3.21% you can see it's gone up on the monthly chart on your screen. I averaged it down about a week ago. If you know, you know. I averaged it down. Basically what I did, we can scroll down to here, I put £344, which is obviously a lot more than I put into any typical stock on a monthly basis. But the reason why I did that is because I wanted to average down some of the losses, and I did feel that it was so depressed that it was an amazing buying opportunity. It was about 40% down at the time, so I was averaging it down. Let's shout out to M de la Creme. If we can all say hello, M de la Creme, for calling it Cyborg. I'm actually going to call it Cyborg from now on, because actually that is hilarious. But that's not the reason why I wanted to shout her out. She mentioned in my DMs that she wanted to sell CYBG, and this was a couple of days before this little peak here started to happen. So if you're listening, I really hope that you didn't sell. Obviously, I don't specifically advise what people should do. I just tell you my opinion on what I personally might do, and and what I think you should look for, and it's for you to do your own research to understand what you might do. But I still personally think, and this is my personal take, call me naive, that CYBG is a really good stock. I think a lot of the macroeconomic factors that we just spoke about, PPI, Brexit, recession, trade war, I think all of that stuff has had such a heavy impact on, obviously it's not as big as some of the other banks, so I think it's hit it harder. But I think if we get through a recession, if we get through a smooth Brexit, I think the benefit of CYBG going into 2020 could be pretty good, and that's my personal take on it. Anyway, also we're going to stick with banking because Lloyd's has gone up 9.26%. You can see that large spikes, 14.37% in the last 7 days, and in the last month 13.84%, which is fantastic. And Barclays has been the third top mover, so pretty much it's been all banks. I'm sitting at 2.58%, as you just saw, but it's 7.92% in the last month and 11.18% in the last 7 days. So those have been the top movers, and again, that's primarily due to the fact that we might avoid a specific recession. Now, you think some of these banking stocks have never recovered to the prices before the last recession. So if we can avoid a recession, it's going to be lit. It's going to be lit, because that is really what's holding a lot of these banking stocks back, personally speaking. Now, let's move to the top fallers. Yeah, and if you ask me, Curtis, my brother, Curtis, what's good? What's your greatest achievement this quarter? First of all, you might be thinking, no one asks questions like that. Well, they do. They do ask questions like that, so you better check your circle and get some new ones that want to see you shine, because I know that me and my people, we ask ourselves, how was your last quarter, my brother? And what are you going to do better next quarter, so that we can all keep growing towards the future? But if you ask me, Curtis, my brother, what is your greatest achievement? My answer would be the predictability of the stock market is my greatest achievement. Listen, there are certain stocks that I bought in the last couple of weeks that I bought specifically in case of certain scenarios, and it's so evident now that these macroeconomic factors, the sentiment that is driving the market, is literally telling me before I even have to look at my portfolio what's going to go up or what's going to go down. Now, obviously, it's not going to always happen in 100% of scenarios. If a company releases some information, then that company might specifically rise, and I won't know about that until that information's out. But if there are macroeconomic factors such as GDP, recession, such as pound currencies, trade wars, whatever, I feel like being able to predict what's going to happen has been the greatest learning over the last quarter for me specifically, because, and it's manifested in, you know, the top fallers at the moment. So although not patterned perfectly, I'm knowing key dates, and I'm seeing what's going up and down. And lo and behold, I expected this to go down, and it has. Sentiment has dropped 9.52%, and I personally just see it as the reason why it's rocketed so much was when all of the other stocks were going down. If you ask me, Curtis, what would you prefer? A bad performance of sentiment and a great performance on all of your other stocks? Obviously, I'm going to say a great performance on all of my other stocks. Yes, there was one point when sentiment was returning about £300 in terms of profit, but all of my other stocks were so bad that overall I was losing more. I'm in profit now, so I would rather, you know, have the hedging stocks, because you do need that, but I would rather some of the other stocks perform. I'm just merging words and just removing letters out of my own will here. Perform better in the future. Also, what went down? Gold producers, which is obviously, again, it's gonna be obvious. So that went down only by 0.52%. Since the last time I invested. You can see that it's gone down by 4.99% in the last 7 days, 5.64% in the last month. Again, if we go into a recession, watch this rise. This will rise. So will sentiment as well. I personally believe anyway. Now, can they rise even if we don't have a recession? Yeah, potentially. You'll always see rises and falls, but I think it's going to be a lot more modest than obviously the rest of the sector. What also went down? CYBG government bond, and you can see that that's tanked, and that went down by 2.90% from the last time I invested. In the last month, 3.44% on your screen, and in the last 7 days, 3.27%. And again, all of those stocks, not sentiment, but the other two stocks, gold producers and CYBG bond, I bought them as hedging plays because I expected that the market is going to continuously be depressed. We're going to go into a recession, and if we do, I wanted some stocks that is going to potentially protect my portfolio, overall portfolio performance against that. And it's like clockwork. So what I'm basically understanding as well is that, like I've always said to you, institutional investors run the market, because there is no way that retail investors all across the world saw the news of the Office of National Statistics and then just started buying stocks. No, that's not what happened. It's banks moving money to, you know, different pots of money, hedge funds, VCs, whoever, that are moving money across because of this news and because of, you know, analyst expectations. And that is the reason why we're all benefiting from these movements. So I always tell you, you know, like a company is my biggest phrase as well. You need to think like a company, invest like a company, budget like a company. Like, if you think like a company, I think you're going to make more sound and wiser investment decisions. Just think your face is like the marketing department, your brain is like, you know, the IT department, your groin is the sales. No, I'm kidding. It's not the sales department. Listen, I'm going to move on, but listen, move like a company, and I think that better investment decisions will be made. Now, in terms of next week predictions, I think that US stocks will start to rise. I did have a slight fall in Verizon, but all of the other US stocks month on month actually increased. And the reason why I think that US stocks will start to rise is because it looks like phase one of the Trump China trade wars potentially is going okay. Reading this from The Guardian, finally the Dow Jones Industrial Average closed at a neat 150 points higher tonight, following the news that Donald Trump would meet with China's trade envoy on Friday. We could see a tweet that says, China talks went very well today, will continue tomorrow being today. We also see that the US tech industry has called for a ceasefire to the trade war, so maybe there could be some pressures there, but I don't think Donald Trump is any type of individual that's going to succumb to any kind of pressure. However, if there is, like, you know, light at the end of the tunnel, so to speak, with the trade war, then I do think that some of these US stocks are going to rise. Probably the S&P 500, you might see rise as well, which is going to be again another positive thing. And you know, maybe it's all a play, maybe it's to do with elections, who knows. All I know is that I really want to see a lot of these stocks rise, because, you know, again, I don't believe that any one of us have really genuinely picked any bad stocks. I just think that, you know, what's been going on in the market has really caused a lot of our stocks to basically be very, very dampened. And so, yeah, I think there will be a mixed bag next week. You know, some will rise, some will fall, some will plateau. It obviously depends on sector and asset class, but overall, I think the sentiment, you know, hopefully should be bullish next week overall. Now, in terms of stocks that I'm selling, the first one I'm thinking of selling is Barclays. I'm thinking of selling Barclays. Now, my return to date for Barclays is 5.26%. So I know that you can currently see here that I'm 2.58%, but this doesn't include dividends. So including dividends that I've received from Barclays, my overall return for Barclays is 5.26%. So I'm thinking that, you know what, I've got 3 UK banks. I don't believe I should have 3 UK banks. I think I was overzealous in the early days. And I'm thinking that to keep Lloyds and CYBG and get rid of Barclays. And if I do that, I will sell and I'll put the money straight into a mix of Lloyds and CYBG. I'm 70-30 that I'm going to do that. So, you know, if I do it, it's going to be towards the end of the month, because if we do manage to get out of a recession, then I expect this stock to rise, and then it'll be a higher percentage that I'm selling at. And then I can move it into some of the other stocks, which I just feel is going to have a better performance over the next, you know, 2-3 years. Personally speaking, I think Lloyds is incredibly undervalued, and I think CYBG is a bit of a dark horse personally, and I might be wrong. So don't copy me, please. Definitely do your own research, but this is what I'm potentially thinking of doing. The other stock I'm potentially thinking of selling is Taylor Wimpey. Now, Taylor Wimpey has been a good stock for me, so you're probably thinking, why are you selling? Well, similar thing. I've received 8.78% return from Taylor Wimpey year to date, or investment start to date, depending on which way you want to look at it. And so 8.78% is a great return, and that's obviously including dividends. And again, I personally feel that Barratt, in terms of housing, is a better stock for me. I think it's had a better capital gain performance. I think it's performed better during the down cycles. So I think it's a better ranked company personally, and I think it's got better fundamentals. So because of that, although Taylor Wimpey has a phenomenal dividend, if I put all of this Taylor Wimpey money into Barratt, then to be honest, I'm going to be earning a great dividend anyway with Barratt specifically. So to be honest, what am I clicking buy? No, I don't want to buy. I want to sell is what I want to do. I want to sell. Yeah, I think I'm going to great with Barratt Wimpey. So even if I sell at a minus 0.39% capital gain loss here, I've still earned 8.78% anyway because of the dividends, because they were paying like 12% annually or something along those lines. I might keep it for another year just because I think it's going to increase next year, but I don't know what's going to happen next year in terms of the housing market and so forth. And so, like, whereas Barratt has given me a very, very, very good dividend, I think it was at 7% this year, 8%. And the capital gain return has been 13.92%. Taylor Wimpey has given me a bit of a higher dividend, but a much lower capital gain return. And I just think long-term, Barratt is the one that I might want to put it into. So I might do that. So those are the two that I'm thinking of selling initially. I do take my time to deliberate a lot of these things. I'm not just going to run and jump into it. So I might change my mind. But at the moment, that's what's sort of crossing my mind. So definitely do your own research. But yeah, I just feel like I've got too many stocks, and I want to kind of shrink some of those sectors where I've got 2 or 3 stocks within a sector. I kind of want to shrink it and just pick the most the companies that I really want to back going forward. So yeah, overall my return is sitting at 2.8%. I'm in profit capital gain. I've earned a decent amount of dividends, but I can see that going, you know, to 6-7%, providing we have a good Brexit situation and we can avoid a recession. Obviously, if we don't avoid a recession, then I will expect all of these stocks to start to drop. I would expect, you know, the everything to be basically be in the red, bar maybe a couple of, you know, some of the hedged opportunities, and then maybe things like Barratt, which has just happened to perform well even in the down cycles as well, and probably Vodafone might stay in the green as well. So yeah, that's my portfolio update. Hopefully you found this information useful. If you did, please like, please comment, please subscribe, please share, help us get to 2,000 subscribers, and I will be back next week with another portfolio update. I did a video yesterday on why I bought some Bitcoin. So I put about 800 and something odd dollars into Bitcoin this week. So check out that video. It is a bit of a long one. I'm going to warn you now. So you're going to need to have, you know, at least a bake or tart and a cup of tea with you if you're going to watch that video. But hopefully you can see my rationale as to why I bought some cryptocurrency as well. I'm not reporting the cryptocurrency as part of this. I'm going to just keep it separate just because this is my 3J portfolio. So there's a specific purpose for this. But yeah, hopefully you find that information useful too. And yeah, have a great weekend, and I will catch you next time with another investment video. Peace.